On average, September is the worst month of the year for stocks, seeing an average drawdown of more than 4%. My name is Eric, my nickname is Irked, and I've been investing in the stock market since 1998. So let's start by answering the question, why is September such a bad month for stocks? And believe it or not, the answer isn't all that complicated. Many professional hedge funds and investment firms close their fiscal year in September. Accordingly, this means that they take profits and cut losses on positions during September. They have to do it before the end of the fiscal year. They have a hard deadline. A lot of these firms don't need to remain 100% invested. So when they cut their losses or they take profits and they get that cash, they'll actually pull the liquidity out of the market. They won't immediately reinvest it. They'll leave it as cash. Since their fiscal year ends in just a couple of weeks, they can always put that cash to work at the beginning of October, the start of the next fiscal year. But here's where things get messy. Everybody knows that September could be a bad month, so the rest of the market is already on edge. We're all looking for reasons, catalysts that might make us want to sell and avoid losses. So when these firms start their routine selling, other market participants see this and they start to panic, and they sell too. This additional selling can cause what's called a selling cascade, where more selling causes more people to sell. And as stocks sell off, sometimes they'll trip stop loss orders, and that will cause even more selling. Suddenly, what was routine selling turns into a market pullback, a correction, or even sometimes an all-out crash. So how do I prepare for September? If you've been reading my blog on Substack, or if you follow me on X, you'll see that since August 5th sell-off, and recovery, I've been taking profits in a lot of my positions. Now, I always have profit-taking targets for all of my positions, but I actually will get more aggressive as we go through the summer of July and August, which are seasonally pretty good months for the stock market. And I'll start taking more and more profits in my positions where possible. The reason I'm doing this isn't to avoid the pain of a September sell-off. Instead, what I'm doing is I'm building up cash so that I can buy my positions if they sell off in September. Additionally, I always make buying plans for every single one of my investments in advance, not just my next buy. My next buy is never my last buy. I have planned out all of my investments and what happens if they go all the way to zero. Now that I've got my buying plan in place with all of these buy targets, I actually place the limit orders for the next 2 to 3 buys of every single one of my positions on my broker as good till canceled orders in advance. By doing this, I have effectively removed emotion from myself. In other words, if I see a big market sell-off, I don't allow myself to change any of those limit orders or cancel them. I had done the due diligence in all that research to make those buying plans in advance. I did it when I was objective and non-emotional. I typically get giddy during market sell-offs because I'm excited about all the good deals I'm going to get. But even still, I don't allow myself to change those limit orders. They were done when there was no emotion involved and nobody was panicking. By doing this all in advance, I'm able to capitalize if all we see is a generic 1 to 2% pullback, or if we see a full bear market like we did in 2018. Now, in 2018, the sell-off didn't just start in September, it ran all the way through Christmas Eve and created the worst Christmas Eve in stock market history. This is why my next buy is never my last buy. You never know when a typical market pullback is going to turn into something more dramatic. And you need to make sure you've done all that work in advance so that you can confidently buy the stocks of quality companies on the way down. To learn more, check out my blog at getirked.substack.com.